Good day. I want to welcome everyone to In Conversation with Convergence. My name is George Evans. This is a monthly podcast, and this is where we feature clients of the firm and special guests that are influential in the industry. We help you, our listener, really get to know market leaders and some of the top issues facing the industry. I'm joined today by a terrific guest, Jim Cass. Jim is the president at Ultimus LeverPoint Fund Solutions. I know Jim for many years before his Ultimus stint, but Jim, welcome, and thank you so much for making time for this today.
George, it's great to be with you. I'm humbled to be invited to your podcast.
Well, thank you. That's nice of you to say. So listen, Jim, why don't we start with a little bit about you personally, right? I want to make sure our listeners kind of know who you are and your pedigree and your history and I think you've moved into a really nice position and opportunity with a terrific firm. So tell us all about kind of your background.
Yeah, and I've listened to some of your other podcasts, so I think my background's going to be a little more boring than some of your other guests. But
you're being too hard on yourself.
No, I started my career in 1990, right out of college with SEI Investments. Entry level fund accountant. At the time, SEI only serviced mutual funds, so I was on the 40X side of our business for a long time. Stayed at that firm for almost 30 years, just a hair shy of 30 years, and had just about every kind of role you can have in a fund administrator. I obviously spent a lot of time in operations, did some product development, did some solution development, ran a client service team. And then for the last 12, 15 years I was there, I was responsible for the P&L of the private funds business, which included the private equity, hedge, and fund-of-fund business. I left there officially in January of 2020 and founded my own advisory consulting firm where I was helping private equity firms more on the buyout side, looking at assets. Their targets were mainly service providers or technology firms, and worked with a bunch of new clients. They were none of my clients where I was previously, and really got to use a different skill set that I acquired over the years around operational and strategic due diligence, around looking at assets and firms and kicking the tires on what's best out there in the marketplace. I really enjoyed it, did it for a number of years, but the downside of it was everything had a beginning, a middle, and an end. Yeah. And when you got to the end, you kind of had to figure it out. So one of the things that I missed the most about being a sole proprietor in my own firm was really working with people and working with clients on a day in, day out basis. I really missed the coaching, mentoring, the development of employees. So I found a perfect fit with Ultimus. First and foremost, we have great board support. We have an outstanding board of active people that talk to us regularly, a great leadership team, a great culture. And so it was just an extra piece to the puzzle of a firm that's growing. So I joined here in February of last year and haven't looked back, and I'm very happy to be here.
Yeah, I mean, listen, I think it was a great move for you. I mean, listen, SEI is a stellar organization, and I know Gary Tankman, your CEO for many years we go back to the BISIS days, right? And what he's been able to build and assemble in a short order, I think is pretty impressive, right? We're watching the growth of Ultimus, and it's truly, and I think what makes you, well, I don't want to steal any of your thunder, but one of the things up front that I think that makes you a little unique is servicing both the registered world and the private world, right? And so we'll talk a little bit about that. I think my sense is you had some strong views about how to run a firm, and that you and that team were probably pretty aligned with you coming over there, right? There was a pretty good
fit. The entry was very easy, George. And back to Gary Tankman, Gary and I get along really, really well. I think we're a nice complement to each other with our past backgrounds and the way we approach things and how we're aligned on how to build a team and how to build a culture around, a good employee experience, but a good client experience as well, obviously. So it's been great to complement his team and be a member of it and help build this thing to where it needs to go.
Yeah, no, I agree. So tell us about Ultimus, right? I want to make sure, we get a pretty good traction on this podcast, and I'm not sure Ultimus LeverPoint kind of is a household name getting there, right? But when you think about some of the people that you compete with, they've been around a lot longer, but I'd love to hear you kind of give us kind of a kind of a thumbnail, snapshot of Ultimus, size and focus and just a sense for the organization.
Yeah, sure. No, and you're right. We're I wouldn't say we're sleepy or sneaky, but we definitely are not in the top five, and that kind of puts a chip on our shoulder, which is a good chip to have if you use it
Yeah.
correctly. But yeah, we're one of the largest, if not the largest, U.S. based private and public fund administrator, and all of our operations are in the United States, spread across the Northeast, Midwest, and even the West. Having an office in like Denver. So like we can service both public and private, and I think that's uniquely positioned with where the market is today. Right, there's a lot of convergence, and a lot of firms that are kind of thinking about launching a private fund or public fund, and we can service both, and there's no disruption to the client experience by being serviced by either side of our business. From a size standpoint, we have over 450 clients. We have a $500 billion of assets under administration. We have over 1,000 employees. A lot of them are highly credentialed with CPAs.
Yeah.
And again, we have a generally remote work environment, and technology's improved so much that you can afford to have people remote. But we have people in offices. I'm in Philadelphia today. We've got plenty of people in our office today, and different areas we have people coming in, and it's great to keep the culture when you're around your employees a little bit more.
Yeah. And is your biggest office still out in Ohio? Do I have that
I
right?
would say for Ultimus overall, it's probably Ohio, but our largest private fund office is Clifton Park, New York, which is upstate New York. And then we have a decent sized office here in Philadelphia.
Right. And New York, was that the LeverPoint acquisition? Right.
Yeah, that was a lever point, and I'm glad you kind of brought that up, George, because our firm was built a lot different, right? In that it was roll ups and stacking onto each other, and it's obviously a unique way to build an organization. And as you collapse those organizations together, the cultures remain the same, and I think that's
Right.
more important. Like when I have come in as a new employee, let's say over a year ago, when I would go to talk to different people from their legacy places where they came from within our organization, they all spoke the same language. They all acted the same. So I think, again, that's a testament to the folks before I even got here around how you kind of absorb the thoughts and views of other firms and make it your own.
Yeah, and listen, we see the pace of M&A, hasn't subsided in fund admin, and there's very different views out there on integration, right? Some firms do a nice job integrating. Other firms don't integrate on purpose, right? Have different models, right? But I've been impressed because you guys have really put together a pretty unique proposition in the marketplace that's now, you're very credible given your size, right? Quickly, right? Which I
Yeah.
think is really a testament to the management team and the board there. So let's talk about 24. I'm kind of looking at the calendar. It's hard to believe. I think Monday's July 1st, right? I'm like, oh my God, where did June go, right? You're kind of midway through the year. I'd like to really talk about your 24 agenda, right? What would you say some of the top things that you and team were looking to accomplish in 24?
Yeah, no, and you're right. We're it's go time for fund admins, right? When you turn the calendar over to July, although a lot of firms feel like that's a sleepy summer, for fund admins, it's actually when it really starts to pick up because folks that are in the marketplace that are looking to either convert to a new fund admin or maybe outsource for the first time, this is when our phone's ringing the most because they want to try and get that accomplished before the end of the year so they can start anew with somebody January 1st. Because depending on who you're talking to, the conversion timelines can be long or they can be relatively short. So, we're obviously focused on both the public and the private side. I personally focus a little bit more on the private side, and what we see is what a lot of people see, which is, the value of outsourcing has never been higher. And the reason why is the firms like ourselves invest in our people and our technology, right? So you're trying to improve the client experience, but also the LP's experience that, consume from the GPs.
Yeah.
So we spend most of our time trying to improve the way we report to our GP, our client, and then the way they report to their end investor, which is also an extension of our client,
Yeah.
if you want to look at it that way. So that's where we see the most opportunity as far as where we spend our time and energy, especially in the technology front, as well as in the people we're hiring. We try and train them as much as possible around being a good client service rep. You're not just a fund accountant. You are a client service rep that happens to do accounting as your core production every day. But how you interact with your clients and try and solve their problems or their issues they may have and make it easier, because some of the things we do are very complex.
Yeah.
The more you can kind of make it more routine with good documentation, the easier it is for the client to consume what you've produced. And then it makes the timelines go a lot quicker and accuracy is a lot better.
Yeah. Well, so let's talk about outsourcing, because clearly lots of definitions of it, but we see, I hear co-sourcing, I hear outsourcing, but it strikes me, I hear lift out, right, right. But what strikes me is there are firms that are very nicely positioned. Most let's call them lift outs for a minute, right? Middle and back office. Most don't happen in any kind of big bang fashion, right? Most people kind of step into these things, right? So, how do you guys think about that, right? When you think about middle and back office, and you go to a GP that's also in, right? Yet now they're starting to feel kind of the pressure of good technology and and the P&L of expenses, and it's maybe a good time for them to look at alternatives, right? How do you guys think about kind of big bang versus stepping in, right? When somebody outsources.
Yeah, George, I mean, that's perfectly positioned, right? The reason why these GPs got into business was to make good investment decisions and grow alpha and get returns, and also then to distribute their product to as many LPs as they possibly can, right? And
Right.
distribute it to the marketplace. So they didn't get in that business to create a large infrastructure of operational personnel and have to keep current on all the operational technology. So this is where a fund admin comes in and says, your core values is to do those top two things, not to do those things that are distractions. So the value prop for us is how we've built scale in our model around, taking the complex and making it easier by a straight through process, by looking at production cycles around fund accounting, treasury services, investor servicing, tax support, management company support, and putting that in a package where you get economies of scale. You mentioned co-source. So that is a model that we do support, where if the leg in, if you will, the first step sometimes is, hey, we already have our core systems and we don't want to have all those people. Would you be willing to come in and process on our platform? And that platform could be the same platform as we use or a different platform.
Yeah.
But the benefit of that is you get kind of used to how those organizations operate, how their funds are set up. You lose a little bit of the scale around the same processes. You might have to connect a couple extra wires into your
Right.
outputs, but in the long run, it's a good way to get to know the DNA of that firm by
Yeah.
processing on their platforms for them and being an extension. Because the goal of a fund admin is to be a true extension of that organization anyway. Co-sourcing, using your word lift out, is the next iteration of that, which is now we're taking all your systems and all your people and doing all that work for you. And the benefit of those firms get is sometimes you get a cost arbitrage, right? They might be charging the management company for the GP for some of those services, and now they realize, there's a component I can now charge to the funds, and then they get, a benefit of better practices, better processes, more scale, and then a headache in a way off their plate.
Yeah, and especially if, let's say they're in growth mode, right? They're able to really take advantage of what you've kind of figured out already, is how to scale a business. And your point about some of those trade-offs are are short term, right? And like anything, right? Like, people like to date before they get married, right? I mean, and that's really to me what co-sourcing is, right? Um, talk to me
You're not going
about
to ask me how long I dated my wife before I proposed, are you?
yeah. She probably said too long, would be my guess.
I don't know.
Talk to me a little bit about market trends, Jim. Like, what do in 24 here, what are you kind of seeing, maybe it's the top few trends and how is Ultimus reacting to those?
Yeah, I mean, I think the biggest trend that we're all seeing, and this is where, again, it helps us as an organization where we're positioned, is alts are going mainstream. There's a lot more, alts managers looking for distribution, looking for product placement, and realizing that they can now distribute in the public forums or the public domains. So they may start it as a private fund to incubate it and then eventually move it over to become a public entity, and then they can distribute it in a mass market. So there's obviously access platforms out there. Some of them are our clients that have a great distribution channel and network in order to get their products distributed. So that's an extra connection we have to the market. But, you know, complexity is also rising, right? So, the great thing about the private markets is, innovation and creativity occurs more there than
Yeah.
anywhere because they're trying to get that edge. So we're seeing a pickup in private credit. Everybody's seeing that. So obviously we're reacting to that by investing in our infrastructure and private credit, both with people and some technology, back and middle office. So that's a trend that.
But it's a
Yep.
very different animal than private LBO, right? Private credit, and
Yep.
that typical PE administrator, the old fashioned PE administrator, really has to make a lot of investment to support PE credit.
Yeah, I agree, George. And because it depends on where you draw that line of what services you're going to perform for them, right? That middle office component, especially, right? When you're talking about just monitoring the credit notices versus doing loan settlement or trade settlement for them, or collateral management services or treasury services. So you really kind of leg into it, and you kind of find out where those resources lie within an organization, what their processes are, and what they want to scale. And they also realize it takes a lot of effort to keep track of these credit notices,
Yeah.
and agency notices. So you really have to have experts that can take large, thick documents and boil it down to only the meaningful accounting related things, where you're keeping ABOR and IBOR kind of in two records,
Yep.
but reconciling those things.
So you're seeing, you're seeing outsourcing, you're seeing private credit. What else are you seeing in terms of a trend?
Well, one of the market trends still remains, unfortunately for a lot of us, is that the interest rates are still quite high. So I think the time to market for private equity firms is extended. Raising capital now is a little bit more challenging. So funds are being delayed as far as launch because they wanted to get to a certain size. So some of the legging on of that could be co-invests and leveling up the investments. And then again, the creativity they have around blocker entities and distribution vehicles and the like make it more complex. So unfortunately, sometimes for the same size asset you normally would have to service, now it's a lot more of a spider web or Charlotte's web around entities and how you get the equity pickups through those organizations,
Yeah.
because they have to remain creative. So I think that the headwind certainly remains, when that kind of funnel starts to open up a little bit more, where you see larger funds now coming to market. And that's still happening, don't get me wrong, at the very high end of the market. It's more that middle market and lower end of the market, VCs and some of the smaller buyout players. They're the ones that are kind of slower to. They don't want to launch a fund if it's only 500 million. They want to get to $1 billion or something.
Right.
So I think that's where the break points, as far as a viable product versus one that may take more time to incubate, and then doing multiple closes and the like, it gets challenging.
Yeah, and I want to come back to your one point on I'll call it the democratization of alts, right? And alts going retail. That to me is coming and coming fast, and I think you guys sit in a very interesting position because of your registered business, right? Compared to most, right? And when we think about that, and we talk about that a lot with our clients, it brings a whole nother discussion. You talked earlier about, working with the LP, right? Protecting the investor, right? This brings up this a whole new ball game. Retail investors in alternatives, right? And we've probably never seen more interest in our risk products, right? Where we risk score, registered investment advisors, right? And forever that was is being used by institutional operational due diligence teams, right? But now this retail aspect puts that in a whole nother light. So I think it's very interesting because I think the LP, let's just call it the new LP, right? They're really not an LP anymore, right? It's a whole new ball game in terms of risk and reporting, right, to these firms or to these folks that are making these investments.
Well,
So
I think it starts with education, right? I
yeah,
mean, it starts with whoever's distributing the product, making sure they're well educated on what they're getting their clients into from an LP standpoint. And you're right, your firm is uniquely positioned, George, with products that can assist with some of that, right?
yeah,
That's huge. So I definitely think when you distribute that product and it's through RIAs or people that are used to selling product A and now you're introducing product B, how do you get them educated on the pitfalls and the lockups and things that are now new to that type of product that they didn't have to worry about before, that the reporting might be on quarterly basis instead of a daily
right.
basis,
Yeah,
and
it redefines transparency, right? I mean,
it,
it's a whole
it really
nother
does.
ball game. Um, Technology. I know a big deal at Ultimus. I'd like you to share with our audience maybe a little bit about maybe some of the key technology investments you guys are making, Jim.
Yeah, so we look at technology investments in a couple ways, right? Number one is, can it improve the client experience? Can it improve the LP experience? And then can it improve our employee experience, right? When that employee experience is sometimes around quality and efficiency. So that's how we generally look at how we're going to make priority in our investments in technology. We have a great tech stack. We have the best in class of core accounting systems, core allocation engines, and middle office softwares and hardwares. Um, where we try and separate ourselves is that LP experience. So we have a UConnect platform where I don't want to call it self-service, but it creates a way to get information out to our clients and our clients' clients in a way where it's a little bit easier to get to the information they really desire. Instead of getting long, huge reports, they can get to just the specific data
Yeah.
points and using APIs to pull it out of our core systems to get it to a place where it's easier to pull. So either a data feed through APIs or them getting reports that are more geared towards what they're looking for. So that's one area we're definitely making a lot of investment. The other is workflow tools, right? I mean, at the end of the day, we have 15 to 20 steps, depending on what that process is, to accomplish before we can get a work product out the door. And trying to do that through email and sending attachments and getting sign offs, and that is a difficult task. So having a production calendar, having your work checklists and your sign offs, maker checker automated in a process where sometimes your client comes in and interacts. They might want to approve a wire, and then you have a audit trail when they approve that wire, so you can move it down the chain of the process. So we're investing a lot in our workflow tools, and then other things that are important to our employee experience as well as our end client experiences, like waterfall calculation engines,
Yeah.
right? A lot of things that are what I call quarterly crescendo items, where you have to staff to a certain crescendo at the end of every quarter, and you can figure out how to automate those tasks and one, make it more accurate, make it more transparent, make it easier for somebody to view the results of the calculations and even do what if scenarios on those calculations. If this happened, what would be the result? And having that be, you know, out outsourced from the GP into the fund admin, and then having that automated as much as possible makes us more efficient and makes us the quality better as well. So those are three just general areas
Yeah,
that we're
but
seeing a lot.
all important. How do you feel? And again, I want you to. Sometimes I'll throw you something off a little bit out of left field, but and I don't want to give away the secret sauce. But one of the trends. I just want to hear your reaction to this. one of the trends I'm seeing, as you know, we work with lots of fund administrators and most of the, leaders, right? And I'm seeing great interest in what I'll kind of call bolt-on services. So firms that want to go out and buy administrators that want to. So the M&A in fund admin has always been go buy another admin, right? Now we're seeing people looking at buying cyber companies, managed IT companies, fractional CCO, CFO companies, consulting companies, compliance companies. What's in general just your take on and the whole theory, Jim, is the obvious one, right? If the more product you can bring to the GP, the better. Like less vendors, less service providers they have to deal with. And we even worked with a European fund administrator who decided their entry into the US was going to be by a compliance company, not a fund administrator, right? Just wanted to get kind of your take on that as president of Ultimus.
Yeah, I mean, I think it depends on what your firm wants to be, right? I mean, I think that's what you view as what is core to your business and where you think you can incrementally grow. I agree with the general concept that you want to capture as much of the wallet that somebody's willing to spend as possible, as long as it's a core offering. So is it a one-off or is it a service you want to start to offer, right?
Right.
So I think in our view, buying market share is one thing, right? I mean, you just buy more clients. That's one thing, but I don't think that's the best thing. You really want to buy something that's going to make you better, right? So it's either getting into a market, a vertical that you're not currently in, or horizontal, a service that you're not currently providing to somebody.
Yeah.
So I think you really got to have a strategy and a plan for making those acquisitions. And I think we have a good plan here. And acquisitions we've made so far have been very accretive to our organization. And they also have to be that cultural fit, like I talked
Yeah.
about. So going off the reservation and buying something just because you think it's a good product, if the culture and the product doesn't fit into where you're trying to go, it's probably not a good purchase. So I
Right.
don't think buying for the sake of buying is a good strategy ever. I think it's more knowing your strategy and what you want to become and then how those components add in. So we already do management company. We already do tax services. We offer some compliance services, obviously. So I think it's kind of, if you boil it down to what extra components are you actually acquiring versus and making that accretive to your client experience is one thing rather than just trying to bottom line grow EBITDA
Right.
or just make the financials look better.
That second strategy you mentioned, only works if you're going to quickly put a bow on the thing and exit, right?
Yeah.
Right. But if you're going to build something for the long term, I think the points you make are spot on. Um, let's as we kind of wrap up here, I want to just go down two more roads. I want to talk about market headwinds, right? Do any you mentioned interest rates, right? Do any others come to mind? And if not, we'll go right to tailwinds. What's kind of working in your favor? But I'm curious what on the headwind and tailwind side, what you'd say.
Well, I think we kind of hopefully avoided one of the headwinds, which was the regulatory requirements that were coming down the path. I think that really was helpful. But with that said, I still think the market needs to react to where it was going, right? Improved ILPA standards, condensed timelines to getting information out, more transparency. So no matter what, that actually assisted the marketplace in getting prepared, even though now it's been vacated. And it could
So
come
you
back.
mean
Who knows
something
what's
like the
going to happen?
private fund rule, for example?
The private funds rule
Yeah.
is what I was speaking of.
Yeah.
Yeah, I was thinking that that's definitely one of the things that that had the possibility of being a real headwind, which now is not.
Yeah.
Right, but
There
it
is a
actually,
school. I will tell you, there's a school of thought that, right or wrong, that it could have been uh, a great thing for the top players because right now there's about 650 fund administrators, right? And probably 400 or 500 of them are under 5 billion in AUA, right? And I think many of those firms would have been crushed by this private fund rule, right? And it would have consolidated the fund admin space, I think, drastically, right? Just one
yeah,
buyer,
and,
right?
and that's sometimes good, sometimes not great, right? So it depends on how you look at it, right? Because there
Yeah.
is definitely a lot of startups. This is a good market, but you have to get to scale before if something like that is going to crush your business, you're probably not the right size, right?
Right.
So,
That's right.
so you
That's
really,
right.
and this is where being the size we are and a lot of our competitors, we're over that hump, right? So it's more, again, how do you improve the client experience? Because that rule was coming down the pike, it made you get prepared and made you better, regardless of whether it went through or not, and where it will mace eventually come through, who knows? But those are the kind of things that challenge the marketplace, but it makes people think a little differently and get prepared for things that are unexpected, right? So I think in overall, I don't view it as a negative. I view it as, it was a wake up call for all of us to ensure that you're staying current with condensing timelines, making your reporting
Yeah, I
better.
think you're right.
That
I think
that's good.
that's well said. How about on the tailwind side? What do you feel? I played the Philadelphia Cricket Club on Monday, and kind of out your way in
Yeah.
Philadelphia.
Yes.
And,
Yep.
and and unfortunately, it was about 29-mile-an-hour winds the whole day, steady. And I think only 4 of the 18 holes it was a tailwind, right? The other 14 you're hitting into the wind, right? But what do you think about tailwinds, Jim? What are things kind of working in the market, or even at your firm that are kind of propelling you through 24 into 25, and then we'll just kind of finish with just kind of your longer term vision and thoughts, right? As we, start to even begin wrapping up this year. But tailwinds, what would you say?
Yeah. So I think, the biggest thing is, and George, you have all this data at your firm, which is great, is how many people still self admin, right? So the biggest tailwind for a fund admin of credible size is convincing the folks that do it internally to no longer do it internally and trust a provider like us. So I think that the largest tailwind for all of us in our space is the convincing and showing and proving our model works really well to more people, right? So
Yep.
that why have that large infrastructure when you have someone else do it? So that's the number one tailwind. I think the other is, again, how alts are going mainstream is a tailwind because it creates more flows of money into our space overall, more investment. So when more investment happens, more innovation happens, and more
Yep.
jobs get created as part of that. So a tailwind is making sure that we stay current on what's coming down the pike and being ready for it. And then the other tailwind I think we have that's a little unique to other firms is a great culture in our firm that creates opportunities, as we just talked about, on the private side and public side. You can move within an organization without leaving your organization and learn something new. And even that, whether it be a vertical of private credit to hedge to private equity to a registered vehicle like a 40x ETF CIT or a mutual fund, right? So I think those are the things that I think I view as tailwinds. I also think, there's plenty to mine in the U.S. talking about forward looking and what I see. There's plenty for us to mine in the U.S. and we're a U.S. based fund administrator, and I think that's great to have our focus entirely on the United States currently. But I think eventually, we see opportunity elsewhere in the globe, right? So I can see ourselves looking over time on expanding our great processes that we have in the United States for U.S. product to other. I mean, we service jurisdictions like Cayman and other because the
Yeah.
Ten Commandments had fallen, but we see an opportunity at some point to expand into other jurisdictions.
Yeah, and, and given your size, the expectation will be that you have some global reach, right? In some of the, whether it be Lux or Dublin or the UK, some of the more predominant jurisdictions. But you're well positioned for that. I think we see a lot of firms go there kind of early, right? And they might go there because they have a client, right? And then it's a whole new ball game. But I think the global agenda for you is probably of paramount importance over time, right? And given your size and stature, and I think the timing's great because you made an earlier comment about self admin. Um, there is still an amazing amount of business um, being done internally by RIAs and COVID, believe it or not, kind of loosened that a little bit, right? I think people all of a sudden culturally started not to be able to deal with the war on talent and the remote discussions and just shifted this to an outsourced model. But it didn't shake it as much as I thought it would have, right? There's still other than hedge, a fair amount of the closed end market is still done internally, right? And so there's a world of opportunity to your point, right? So
That's why we like your data, because you highlight how much is still out there for us, and that's what we use
right.
with our new business
Yeah, I
development
mean,
folks to say,
you know,
go knock on some doors.
you can have this great debate of what's harder, takeaway from another admin or wrestling a self admin. I don't know, like it depends on the day of the week, what side of that I'm on, right? It's,
That's right.
but,
Yeah.
but listen, I want to thank you for joining us today. And I think it was a great conversation. I think you've acclimated very well and quickly there, Jim, with kind of all your institutional knowledge of 30 years at SEI, and I think that you've got to be bringing a lot of value, and give Gary our best, and you guys have been a really great client, and we're appreciative of all the work we've been able to do with you over the years. So thank you.
Hey, George, it was a pleasure being here. It was always great to talk to you, and I look forward to doing some more work with you guys in the future.
Sounds good. All right, perfect. Thanks. Have a great day.